Planning on changing the world just like me. You could be the chairwoman and I'll be the trustee. Let me give all to your benefit. Then I'll get blessed out my deficit. On changing the world just like me. You could be the chairwoman and I'll be the trustee. Let me give all to your benefit. Then I'll get blessed out my deficit.
Welcome. I am your corporate IQ host, Tangiel Johnson.
And I'm your co-host, Lachez Solage.
Hi, Lachez. You know what time it is?
Yes.
Girl, what time is it? Just tell me, what time is it?
It is time to put those heels on.
Yes, ma'am. So is your makeup ready?
It is. It is.
Okay. Hair done?
Yes, it is. Yes, it
Okay,
is.
check. And pearls. What are pearls? You got your pearls on?
Oh, here we go. Pearls.
Okay, all right. You getting
There
them
we
on.
go.
There you go. That's what I'm talking about. We have to
Yes.
be equipped when we're getting ready to go into corporate, right? And
That's
for
right.
all our listeners out there, in the words of Q-Tip, high, low, or even open toe, put your heels on, baby.
We're ready. We're ready.
Now, in the case of our special guest, who I'm going to mention in a moment, this young man, he's not wearing heels. I should say suited and booted. So I'm sure he can get suited and booted at any given moment. But Lachez, I wanted to tell you how excited I am about our guest today. He helps solopreneurs. This is right off of his profile. He helps solopreneurs create the life they always dreamed of. Sounds amazing, right?
Yeah, it does. I'm really interested to hear about this.
Me too. But before we start, there is a standard disclaimer I put out there, and that is that the views expressed by your corporate IQ and our guest today are our own, and they do not reflect the views of any company or organization. So with that said, thank you all for joining us here at your Corporate IQ podcast, where we will discuss the pearls and the perils of corporate America with a lens from the people of color experience. And today's segment is Developing Your Financial Acumen with Ben Shamberger. Ben is a certified financial planner and advisor with 10 years plus experience with companies like Fidelity, Nationwide, his on your side, and Edward Jones. And Edward Jones. These are all big heavy hitters that I'm sure most of us have heard of. And he is also an author. He's a co-author of the financial education book, Money and Stuff. I got a lot of stuff. I got a lot of money, but I got a lot of stuff. And he's also the co-founder and co-host of the Financial Edge podcast. Welcome, Ben.
Thank you so much, Tangiel and Lachez. It's a pleasure to be here. I'm really excited to have this conversation with you both this evening.
Awesome. And a fellow podcaster indeed. That's awesome.
Yes.
Absolutely. We got to represent for sure.
That's represent.
Yeah, that's it. So let's jump in if you're ready, Ben.
I'm ready.
All right. So first, let's start off with your journey. How did you get into finance?
Wow, great question. So I knew from the time I was a kid that I had this involvement in, I guess, bend towards understanding and wanting to understand money. And so that started out with me doing things in sales even as a kid. So one of my first experiences with sales was there was this sales magazine that would come to my house when I was a kid. And I remember getting the magazine and thinking, man, I can get anything I want in this magazine if I just, make enough money to do this. And so there was a food line about 1.5 miles from where I grew up at the time. And sometimes my mom would be willing to take me. My dad would never do it. I think he was just too embarrassed. But my mom would take me and would allow me the experience of setting up shop outside of this food line. And I would sell those world famous candy bars which is still around today. I actually saw one in my bank this afternoon. They still sell those, but I remember selling those and using the proceeds for those to actually go out and get whatever I wanted to. And at that point, I was probably between 5 to 7 years old. My money,
Wow.
my money journey started really at that point in time, and then from there, just kind of continued to develop and evolve. And in 2000, I believe it was 2012, I started with Edward Jones, and from there got my start into the financial industry. And for the last 10 years, I've worked with various different companies. Now, for the last 4.5 years, I've been here at Dixon and Company Wealth Management in Winston-Salem, North Carolina, doing financial planning for individuals and families and small business owners.
Okay. Excellent.
Perfect. Um, what would you say? So you've already shared you've worked for some large, heavy hitter firms. Do you have a particular specialty? You did share with us individuals and business owners. Any particular specialty that you focus on?
Yeah, great question. I would say the specialty that I tend to focus on right now the most would be small business owners, and what I mean by that is typically people who are self-employed. They might have 1 to 10 employees, typically not more than that, and they have an opportunity or some challenge in their business that they want to either overcome or that they want to achieve. And that's really driving them to say, okay, I really got to lean in and focus on this, but I might not have all the answers myself. So now I need to start bringing in professional partners to the table around me. And so what I do is, because that process looks very similar, regardless of what the challenge is, I've kind of identified that roadmap and the steps to follow for a lot of business owners who are in that. Doesn't matter whether you're in a service business or consulting. Oftentimes that roadmap is very similar for the type of things you're going to need. So for example, they might need a business attorney. Well, I know a lot of business attorneys. They might need business banking partnerships that extend above and beyond just the existing bank that they might have now, in order for them to find the best opportunities for lending and building business credit. They might need to open up new businesses. They might need to start doing hiring above and beyond where they were. They might need expansion of warehouse and facilities. So all those types of things I can get into and help them figure that out, kind of being like a CFO for them on call when they need me to be. And so instead of, paying thousands or hundreds of $1,000s a year to have a CFO and to have attorneys in-house, I can help them figure that out. So
Yeah, Tandio, yes.
I'm so excited. So if you ever see me do like this, Ben, that just means I'm excited and I want to say something.
go right ahead.
Yeah, she's like on the edge of her seat.
Because you know what he just described, Lachette? Did he not just describe Coach in the Pocket? He
Yes,
did,
yes, he did.
right?
Yes, he did. Coach in the
So
pocket.
yeah, so Ben, Lachette and I do coaching, career coaching, and we, help individuals and they thrive and they go on and leave us, but on occasion they want, they might find themselves in a crisis or they might be in a crunch to where they just need some guidance. So she is the creator of this phrase, coach in the pocket. So
Okay.
that's what happens is, people who go through our program after they're done, they can come back and stay retained with us, so to speak, and give us a call. And, within an hour, we can turn around and, help them. And that
Yeah.
sounds like what you're doing.
Yeah. No, I love that phrase. I'm going to have to start
Yeah,
using
it's like it's
advisor in
a
the
it's a
pocket.
CFO in the pocket.
CFO in the
Exactly.
pocket.
Exactly. So,
I'll send you an invoice. I'll send you an
that
invoice.
sounds good. Absolutely.
That's exactly what I was going to say. You're welcome, Ben. You're welcome.
Appreciate that one. That's
So
good.
interesting. So, did you find that you just kind of had a passion for the small business owner? How did you end up kind of specializing in that particular area? Or did you just find yourself, you kind of ended up there with just that many clients in that or referrals?
Uh, a little bit of all of that. So Tangiel, you and I talked about this on a pre-call, and part of my journey is as I transitioned from working with really big firms into working where I am now. There's 5 of us in this office, and I've been here about 4.5 years. And so part of my journey was, when I was working at some of the bigger firms, I really didn't have the opportunity to work with or do financial planning work for a lot of people that looked like me and that had the same kind of desires and goals that I specifically had. And while I got a lot of great experience helping a lot of people achieve their dreams, I felt like there was a portion of that that was missing. So I intentionally set out to say, hey, let me just start connecting with people in this area who are African American, business owners. And that led to creating a networking group in person. That was in 2019, which then led into the pandemic where everything went virtual. And by summer of 2020, everybody was having like 10 Zoom calls a week, and so then it was like, okay, well, they're tired of doing Zoom calls. So like, what else can we potentially do? Well, we had created a Facebook community online, and then that led it from, I think, going from like 30 people to like 170 something people in that Facebook community now. And a lot of them are business owners or are starting, and people would just start asking questions. Hey, like, Ben, you've kind of been there, done that. You worked with so-and-so. They told me about you. There was a local business incubator in Greensboro that
Oh,
people had found out about me because of someone else through that program. That led to a handful of referrals. And then after I just started doing it long enough, it just kind of came a thing of like, hey, if you're starting a business and you want to retire, like, you need to go talk to Ben. And I've gotten a lot of referrals over the last couple of years. And so I've just felt like this is just a natural space where I can fit in. Selfishly, there's not a lot of competition of people wanting to serve this segment because the
ah,
segment doesn't come with a lot of assets right away as new business owners. And most advisors want to talk to you after they see the assets hit, your account. So for me, I could come in, work with them in a way that works for the business owner and that works for myself, help them grow their business. And by doing that, a lot of word of mouth, a lot of referrals would come from that.
Sure.
wow. I love what you said that you've actually created like a niche for yourself because it's a segment that others won't touch because they don't have the assets. And we're talking about POCs to be
Correct.
specific, right?
Yes.
Let's be clear.
Yeah. And
POCs
there
didn't
are
have
a
the
few
assets.
advisors. That's exactly right. There are a few advisors, but we're so spread out, and honestly, like, we don't even really have to compete because I have more than enough clients, that I can work with, and the other advisors that I know that are doing something remotely similar, they have more than enough too. And so anyway, yes.
Awesome, awesome. I guess for let's switch gears to the individuals. I know that right now you're really focused on the small business owner, but individuals, what are some of the kind of fundamental financial advice that you've given over the years that would be helpful for our listeners to know? I mean, the show is focused on the person of color, so kind of in
Yeah.
that same vein, what would be helpful for them to know as an individual, understanding 401ks, these are corporate folks, what would be really, really helpful and from a fundamental basis?
Absolutely. I think there's a small handful of things that I'll try and cover because I could talk about this all day long, but I know we don't have all day long for that one. But one of the things I think, Tangela, I mentioned to you before was when we think about, 401ks, it's important to be able to think about that not just for the money that you can put into it, but also maybe for the money that your employer can or is willing to put into it. So, for example, if you're putting in, I'm just going to throw out a number, if you're putting out 5%, but then your employer can match another 3 or 4%. Well, if you have the ability, take advantage of all the free matching money that they can offer you. You might not have the ability to do all of it right now today, but create a plan for yourself to say, okay, I'm going to start with my 3 or 4 or 5%, and then I'm going to work my way up to whatever the full match is. And then if you can do above what that match is, now you're getting into, let's just say, double digit contributions where you're contributing 10 to 15%. And that becomes a really sustainable level and benchmark for you to save of your income over time. So 10 to 15% of your salary or 10 to 15% of your income. That can include bonuses and additional forms of compensation as well, if your company does offer that. So that would be one way to think about that financially. Another thing that we do in our coaching program with individuals is when you work with a company, we want to look at not just your 401k, but we want to look at the total summation of your workplace benefits. That would include things like
Yes.
healthcare, so your insurance. That would include things like an FSA, flexible spending account, an HSA, health savings
Yes.
account, HRA, healthcare reimbursement account. There's a lot of different options that you might have. And oftentimes we tend to leave money on the table that we don't
Yes.
have to leave on the table or that we can be more efficient with. I see so many people who will pay for medical bills out of pocket when you have access to a tool that will allow you to pay for that with pre-tax money, which means you can keep more of your own money. And for people of color, I think that's one of the most important things that we can begin to utilize. It's already there for us as a tool ready to grab. We just have to know how to use that tool.
You know what? I think I want to make some things really clear here is that when you're in these corporate spaces, a part of what we talk about on your corporate IQ is being able to navigate a corporate space. And this is a big part of that, understanding the financial pieces of navigation. So understanding that, you have 401k accessible to you. A lot of companies have a matching program of some sort. So just being able to come to someone like yourself, to a financial advisor, to
Right.
say, hey, this is what my total package is. Help me to optimize every piece of it. So I love what you said. It wasn't just about 401k and okay, I signed up for that. What else is there? Like you can contribute to up to 15%. There's things that you can do with your allocation that you have to be really effective and efficient about for the time that you're going to be with that organization. So I love that you spend time on the total compensation with your client. It's so important. And those FSA accounts, those are always so tricky. Can I just say that? Those are
You can
always
say
so
that.
tricky in terms of, does it make sense? Does it not make sense? Right. And I think over the years, I've learned with the FSAs, I used to just stay away from it because I'm like, I don't know what it is. I don't think it makes sense for me. But childcare and in medical, if you know that you're going to have some
Right.
medical bills, it makes sense to at least reach out, for your guidance on something like that. Hey, does this make sense for me? I know that in 2024, I'm going to have a lot of medical expenses coming up. Does that make sense for me to do that year? Because it's not something
Yeah.
that, and you can correct me if I'm wrong, Ben. It's not something
Sure.
that you can decide every year. It depends on like, hey, is next year a year where you're going to have the medical expenses, and maybe a year when you don't. Those are the things that folks would have to come to you to understand. When is it appropriate?
That's exactly right. So, for example, a lot of those benefit accounts or benefit options that are available to you, they will typically give you the option every year at enrollment. So, most companies, their enrollment tends to be somewhere between, let's say, October 15th and December 31st. And they may have another enrollment period for newer employees, or if the company happens to allow you to do a twice a year enrollment for a particular benefit, you just have to check with your company. But one of the things that we're looking at is we're saying, okay, well, let's get a copy of what's called your benefits guidebook or your workplace benefits guidebook. Oftentimes it's a digital PDF book. You can ask your human resources officers for a copy of those, or they might have it behind a portal that you log into online. But when you're looking at those benefits, you may not understand all that jargon, but if you've got an advisor that you can reach out to and trust, typically my clients that have known me for a while, they'll just send me their benefits guidebook via email and say, Ben, take a look at this. And because I've done it for so long, I can literally tell them, because I know their plan, I know their story, I know their family, I can literally look through it in 10 to 15 minutes, and sometimes even quicker now using AI, and sort out, hey, here's what's changed, here's what you really need to know, and begin to focus on those things. So, for example, to your point about, let's just use the example of somebody's got, children, but they're also got a spouse, and they're trying to think about, how do I take advantage of the best benefits for me? Well, I can think right offhand, a couple of benefits that we want to talk about would be obviously using the HSA or an FSA type of an account to get that pre-tax benefit that we can use for medical expenses and or childcare expenses. That's way more efficient dollars, right? Where you can keep some more of that money back in your pocket at the year end. When we're talking about contributing to a 401k, we're going to look at your tax bracket and figure out how much or what, if any, should we contribute towards pre-tax versus post-tax, which is Roth contributions. Which one of those type of accounts should we use? We can also look at the company sponsored life insurance and see what the company is willing to provide for you for absolutely free, what they'll subsidize, and then what you have to go out and pay for on your own. Because a lot of times employees can get 1-2 times their salary in free life insurance or heavily subsidized life insurance from their company. And oftentimes I see where people simply aren't taking advantage of it. Maybe they talk to a representative and that representative convinced them to get, some whole life insurance policy, but they never even signed up for the free life insurance through their work. Those are just really big, simple, easy things that we can put on autocorrect.
Sure.
Wow.
Nice.
Fantastic. It's so important. It's so important because it's not enough to garner these great wages. It's like, you have the money, but if you're not optimizing it, it's just sad, you know what I mean? Because time passes and you're not
Yeah.
really optimizing the money you could have grown, whether it's your bonus money or the money that you earn, every month or biweekly. It's sad to not have the toolkit, as you talked about, to know what to do with
Yeah.
that at the beginning.
Yeah. I think
Awesome.
Yeah.
another one. Well, go
Go
ahead.
ahead.
Go right ahead.
Go ahead. Go
Another
ahead.
one
Go
really
ahead.
quick I want to mention is if you have access to a 401k and you have left your employer and you're trying to figure out what to do with
Yes.
it, don't think that you have to
Yes.
cash out that 401k simply because you left that employer. There's options. For the sake of time,
Yes.
I'm going to refer people back to episode 22 of the podcast that I co-host, which is the Financial Edge podcast. But episode 22, we talk about retirement plans, take
Nice.
it or leave it. And it's a 15, maybe 20-minute episode you can listen to really quickly. But we talk about the 5 different options everybody has with your old 401k when you leave your employer. And if you still have questions, you can reach out from that.
Ooh.
Awesome. That's fantastic. I'm glad you surfaced that. That's a big topic. So when you're leaving one employer, so again, your corporate IQ, we're talking about entry into corporate, and we are also talking about your exit. So that could be exit, towards retirement, or that could be exiting to another company or another position,
Mm-hmm.
right? So that's
Mm-hmm. Yeah.
fantastic. Episode 22 on your podcast, it's awesome to understand what to
Yeah.
do with perhaps your 401k and how to move that over perhaps to another employer or things of that nature.
Exactly.
Awesome. I'm going to listen to that. I'm going
Me
to listen
too.
to
Sounds
it.
Me
good.
too. Me too.
Ben, what are some of the surprises? I always love this question for financial folks. What are some of the surprises that you've encountered over the course of your career? So large companies, small companies, things that you were surprised people didn't know from a financial acumen standpoint.
Yeah. I was definitely surprised by the overall response of the industry in terms of we will provide you information, but we won't provide you guidance. I think that was one of the things that perhaps I was surprised by as an advisor. And then the more I started digging into helping people with workplace benefits and realizing, oh yeah, companies have people that are in their HR and that are in their benefits departments, but they are not licensed advisors. They don't have their Series 7 or 65. They don't have their certified financial planning certificate. So they know the benefits probably just as well as I do. However, they cannot give advice about that. And so that was like one of those first surprises that for me was like, oh, I should help people then, because it's not just enough to know that you have benefits. It's a whole different thing to actually be like, well, which of these benefits should I use? I've got limited dollars and virtually unlimited options, right? From investment accounts to,
Yes.
how much I should put in, to health insurance, to fringe benefits, and just being able to have somebody that you can talk to about those things. And so that was one of the things that surprised me, maybe within my own industry, and kind of thinking about, the whole corporate benefits and human resources piece. I think another thing that surprised me was as I went back in my thinking about what I experienced in 2007 and 2008 with job transitions, and then how where we are right now in some ways mirrors that, and in some ways really doesn't mirror that. But knowing and understanding there's probably going to be a lot of people that need to listen to your podcast as the economy changes over the next 12 and 18 months, and just how that might impact people. I was very surprised by the number of companies who will offer great benefits and the number of companies who would offer not great benefits or no benefits at all. And just being able to kind of pit those against the two and help people. I got a text message from a client today who is comparing her previous employer that she just left to her hopefully new employer that might bring her on in the next week or two. And she just sent me
Wow.
just a quick message, hey, with 5 bullet points, Ben, take a look at these 5 things and let me know. And then I'm just surprised like how many people don't have that option, to have somebody where they can just reach out and have that quick conversation and just feel good walking into a second or a third interview
Yes.
to make those kinds of decisions.
Wow. You know what? I want to just like, that's amazing what you just said right there, because it's so timely in the market that we're in, right? You're saying that,
Yes.
hey, recession is the word you didn't use, but I'm going to use it, right?
Sure. Yeah.
Recession perhaps looming this time, and last time full-blown recession, but The idea that you need to kind of know the total benefits that you're walking into and what you might be leaving, moving into a new company from where you were
Yes.
Right.
before, and being okay with that. You might have to say, okay, well, these are the total benefits last time, and this is the total benefits this time. At least you know. If you know that you're leaving something on the table, perhaps you know you have to make that one thing up, but at least you know. So if you don't seek guidance from someone like Ben or Ben, reach out to Ben
Yeah. Yeah.
to know what you're missing out or what you're leaving on the table with making that decision next time. Again, we
Yes.
said we are in a particular marketplace that folks have to do what they have to do. So that's something we have to kind of understand here when you're in this type of marketplace. People have to do what they have to do. But I think seeking guidance from you allows them to understand what they're getting into and knowing
Right.
that, like when they sign the dotted line with the new position.
Right.
Yeah. And the biggest thing that I want to encourage people with is like, even if you think that you don't have an option or very many options at all, talk to someone like me. Find somebody who's a certified financial planner. Again, it doesn't have to be me. I've got clients all over the country, but I also have friends who are doing similar things that I'm doing, and they've got clients all over the country. And if you can just have that conversation before you get to the batter's plate and you have to swing, just have that conversation with your hitting coach and say, hey, look, help me understand what my options are. Do I have any options more than what I think? The answer is probably yes. And maybe they can help you uncover ideas and thoughts that can help maximize your potential before you ever take that leap. So,
Awesome. Awesome. Have you seen any differences? So from POC clients to non-POC clients, have you noticed any significant differences with financial literacy, and what would those be?
oh yeah, for sure. I think one of the
I knew the
biggest
answer would
things
be
that
yes.
yeah. Oh, wait, how much time do we have again? No,
Exactly,
I
exactly. I'm
think
being
one of
generous by saying, do you see any differences?
yes. No, thanks for that softball pitch there. One of the big ones that I see is just the trust. I think that's a big word, right? Is the
It's good.
trust
Yeah.
and willingness to participate in things such as investment accounts, things such as 401ks, and just to do that because that's what you know to do. And I think for a lot of people of color, one, finding somebody that you can trust, like we were having this conversation yesterday. I was having this conversation yesterday with somebody about doing business with other Black businesses. And I think we've all had that experience where it's like you want to support somebody, but then they just didn't do right, like for whatever reason. And then now all of a sudden you were like, well, I already have a hard time trusting on one level. And then that experience just brought my trust factor down by about 2 or 3x. And so now all of a sudden you're trying to build wealth. You're trying to develop that professional partnerships around your financial table. And now somebody's telling you, okay, go put your money in the stock market and it may or may not, grow over time depending on what you do. And oh, by the way, it's going to cost you money. Like that's non-negotiable. So I think that trust factor, that's really one of the harder pieces, which then leads to people thinking, well, I just need to go out here and work and hustle and then never slowing down or taking any time to develop financial literacy along the way. And one of the things that propelled me through getting my certified financial planning certificate was realizing that I wanted to be that person, even if I was the only person in the room who looked like me, so that I could bring this information back to my community. And hopefully they would
Wow.
feel okay trusting me or somebody like me if they heard a consistent message and I wasn't just asking them for money, asking them for money, asking them for money. And so I think trust is one of the biggest things that's there. I think having the information in a easily digestible and on-demand format is another thing. Like, for example, when I first came into the financial industry, most advisors out there, this was pre-pandemic, right? We're talking 10 years ago. Zoom wasn't, 4 or 5 times a day. And so a lot of the financial education for clients was find the richest people that you know, take them to a steakhouse, get them either during lunch, which wasn't an option for most people while they're still working, or, some fancy environment where a lot of people of color that I know simply just weren't going to feel invited or motivated or encouraged that they even belonged or that they could even come and participate. And then even if you went, you knew that you were starting down here from an education standpoint, and you weren't walking into a room already knowing what people are talking about when they're talking about living trust or revocable trust, or how to set up your own endowment funds and different things like that. So me seeing that dynamic play out and then understanding how that impacted it really kind of spurred me on. But the great thing that's happened is because of the pandemic, kind of you've got this dynamic where you can get all this information now via Zoom and on demand, and we have podcasts. And now we spent the last 2.5 years creating this PDF book that's only about 40 pages long. Each page is its own topic, so that people could easily understand it. And I give that to almost everybody that'll take a copy. Sometimes even people that don't want it.
I want a
Um,
copy.
I'll make sure you get one.
Okay.
one of the things that we've heard a lot about recently, and this we're talking about this kind of marketplace that you mentioned earlier. One of the things that came out was that during the pandemic, non-POCs lost a lot of money because they were in the markets, right? I'm sure you've heard this. And so
Sure. Yeah.
POCs were kind of okay because they weren't in the markets. So I guess my question to you as I set that up is it really difficult for you to socialize risk tolerance to POCs? Is that something that's really difficult for you to get persons of color to understand risk tolerance?
Sometimes it can be, not always. I think it has, for me personally, I think it has more to do with their willingness to lean in and learn something new as opposed to actually understanding the topic. So, for example, one of the quickest ways that I could explain risk tolerance to somebody would be, hey, if you were given the option of living in a building down by the beach and it also had a view of the mountains, would you rather be having a view on the top floor and living up there because you can see all of the beach one direction and then all the mountains the other direction and have that view, right? To have the potential for all of that? Or would you rather be at street level, have all the noise associated with that, but no, you could easily be in and out if something happened in the building, right? And that's one of the quickest ways I can begin to start associating investing with a particular level of risk. And I think just there's several quick analogies that I could use that kind of demonstrate that same philosophy. But it's really a matter of, are people willing to lean in and go above and beyond just thinking about risk in one sense, right? There's all different kinds of risk. There's a risk of leaving work. There's a risk of leaving your job and going to another company, or starting your own new company, or investing in the stock market, or giving somebody a microfinance loan, for $10,000 and hoping that they're going to pay you back because they want to go start their own company. So there's just so many factors involved with that. And sometimes, yeah, it's easy and people connect with that. And other times it's really, really hard. So.
Yeah, it's interesting. I wonder if there's some type of, do you give them like an assessment to understand like where they are and what makes sense for them? You're like,
For
okay,
sure.
so you have zero risk tolerance, and so you're mutual funds, and
Yeah.
like you're kind of like you're okay with risk, and so maybe we can dabble with some stocks with you. Is that like how do you kind of do that? Is it an assessment?
That's a great question. So we do use an assessment. We also do it a little bit conversationally, but I also, part of who I am as an advisor is uh, I read people. So for example, if I know that you have worked as an entrepreneur several times over again, inherently entrepreneurs tend to take a little bit more risk than people who prefer that steady paycheck week over week or month over month over month. And so you can read some into that. But yes, any client that works with me as a certified financial planner, and when we're talking about investments, before we ever get started, there's going to be an assessment, typically anywhere from 15 to 30 questions, just depending on how in depth that we need to go. That will be documented with their account applications. It'll be documented with what we call an investment advisory contract, which basically keeps me accountable to their level of risk and the things that they are willing to accept in their investments and not willing to accept. And so all that's documented and kept, and then we'll review that. Within the first year, we'll typically review that 2 or more times, and then typically once a year after that, unless something changes in the client's life or situation where we need to do that more often.
Awesome, awesome. I think we can see like a passion with you in terms of what you do for the POC community, what you do for the community. Do you want to share with us some of the things that you're currently working on that supports our community?
Yeah, that's a great question. So you heard me talk a little bit about the online community that I created. So that was back in 2019 when that was first established. It's called Rise. I'm not doing a lot with it at the moment, but there's a lot of things that I am developing under the surface right now, and so that's kind of been put on hold. But a lot of people are still connected in that. I think it's about 170, 175 strong at the moment, and so again, that's just a totally online virtual community. People can reach out locally and say, hey, do you know a good repairman? Do you know a good hairstylist, whatever? And so it's kind of through verbal affirmation and experience, like, hey, like, you're going to do well if you've done well by people. And if you haven't done well, you're going to know it inside of this group, right? Because you're not going to get anything from that. But that's a group that I had helped create back in 2019, and there's multiple leaders involved with that. One of the other things that I try and do, obviously, is the podcast, and a lot of the content is created on a very basic level so that people who don't have investing experience can understand it and feel like that they could get started very easily by simply just listening to the podcast. And if the podcast doesn't work, basically all the content that we have on the podcast, almost all of it, minus our special guest, is recorded inside of the book that we created back in I think it was 2021 when we first published it, the Money and Stuff book. So again, written on a very simplistic level. In that book, we talk about workplace benefits, we talk about life insurance, we talk about credit, debt, we talk about first-time home buying. We have a financial coaching program in our office. So where you have a coaching program and it's kind of based around that corporate environment. Our coaching program is strictly through the lens of finances for individuals who are getting started. So maybe they're not yet at the point of investing, or maybe they have some small investments, but they really want to start taking steps to build and accumulate faster. We will work with them through our different phases of our coaching program. Oftentimes people come to us and they're in a mound of debt and they're saying, hey, Ben, I want to get started with 50 to $100 a month, investing. And we're going to say, well, pause. Let's pump the brakes on that really quick. Let's evaluate your financial situation. Let's figure out who you are and why that's important as it relates to your money, so you can understand how you were designed to build wealth. Like, we all have a way that we were designed to do it, and it's not the same for every person. So while you might hear somebody else say that they're going to go out and start a business, that might not be who you are. Maybe you're really good at investing, or maybe you're really good at saving. And so you've got to tap into what I call your money superpower, but you won't know that unless you take time to learn a little bit about yourself and then lean into who you are, not what you heard somebody else doing, and then go that route. So we try and give people that momentum through one-to-one training. Oftentimes they come to us in debt, and typically by the time they leave, we've taken them from net worth negative to net worth positive. They're now investing. They've now optimized their workplace benefits. They've got a will, a trust, and life insurance. And those are some of the basic staples
Wow.
that will help people build. So those are some of the ways that we're doing that now. We do local seminars and educational events through YMCAs and other opportunities and speaking engagements as we have. So I'm always looking for new opportunities as well. So if you hear of something or you want me to be involved in something that you have going on, let me know. And if I can't do it, I've got other advisors that I'm sure they'd love to get and be a part of as well.
Very nice.
Oh my goodness. I love all of that. It's like a one-stop shop. There's so many things there that, even if, same thing, your corporate IQ, the same concept in terms of there's a continuum. So there's some things that people are really good at and some things they need to work at. So are you good with navigating corporate, or are you better with assessing a corporate environment? So that's where that continuum is. The same thing here. Your financial acumen is on that continuum. You might be pretty good with maybe your 401k stuff, or you might be good with mutual funds and that sort of thing, but you might not know anything about life insurance. There's so much to know, and there's so many pieces to what you need to know to be kind of totally informed. And so I love that you can come to Ben for all of that.
That's right. And people should not feel embarrassed about what they know or what they don't even think that they don't know. You shouldn't be embarrassed about even asking a question. Let me tell you something. I've been in the industry 10 and a half years now, and I've been following finances since I was probably 12 or 13. And I don't even know all there is to know. In fact, it's so much to the point where I've just accepted I don't know it all. I'm never going to know it all because the financial industry is too big and it changes rapidly. So as long as I know other people who don't know what I know and we can rely on each other and then trust our credentialing and those resources, my response is always, if I don't know it, I know how to go find it for you. Right.
Yes,
So,
I love
Isn't that
it. I
great?
love it,
Great.
Ben. I love it. I love it.
yeah.
Let me end with this. What are you the most proud of in the work that you've done? It could be in the community or just in general. What are you most proud of, Ben?
I'm proud of a couple of different things. One, I am proud of definitely having passed the certified financial planning exam. You're talking about an exam that's literally a half day exam, which requires anywhere from 6 months to 2 years of studying, depending on how fast you can
Wow.
go and how what your learning style is. And so for me, I went through that program not once but twice. But at the end of the day, I'm still a certified financial planner, uh, and learning all of that and putting my nose to the grindstone to get that done in the middle of the pandemic with a wife and 3 kids. That's probably one of the most proudest accomplishments that I have. Um, I'm also very proud of being willing to take a step back from a company who was paying me extremely well to take an opportunity to build something for myself that nobody could take away from me in the future, and having the vision to be able to see that and to stick it through to be able to walk this out where I am right now. And so there's multiple pieces that still have to come to fruition, but that's one of the things I'm most proudest of. And coinciding with that, I'm most grateful for my wife, Joy. You know, she and I have been married since 2010, and without her allowing me to go through this journey, while us having 3 kids and our marriage not totally falling apart, it's been rough for sure, no doubt. But without her, this would not have happened. So I'm most grateful for her for that, and parents and family who have supported us along the way. And one other quick story, I'm also extremely proud of um, me helping this particular client about 2 years ago who was in a situation where they were bleeding out about $1,300 a month of money every single month. And when they came to me, they couldn't even afford the most basic packages that I had. A friend paid for them to get started. And now 2 years later, we're still working together. They are cash flowing about $1,500 a month, and they're about to take on a new job that could potentially be paying them about 150%, about 50% more than what they've ever made previously, plus work
Wow.
benefits, health insurance, 401ks, vacation, the hours that they want, the whole 9 yards. So,
Excellent.
this wasn't that, 7-figure client that came in and handed me a couple of $1 million. This is somebody who had none of that, and to be able to see them grow through that process, it's validating for me to have left a company where I could have made significantly more money day one, but I chose this route, and now I know that I can help people the way that I want to, and I'm getting back to the same income that I was making previously.
Very nice.
Awesome. I love it. I love all of
Round
that,
of
Ben.
applause.
Oh, wonderful.
Thank you.
Congrats on
Thank you.
everything.
Yeah.
So, Ben, share with our listeners the best way to contact you. So, again, as your business grows and you offer more services, they can continue to stay in contact with you, and also share the name of the podcast once again so they can listen to not only episode 22, but all the other episodes.
Absolutely. So there's a couple of different ways you can reach us. If you're here locally, our number is 336-245-8626. That's our office number. You can call or text that number, and somebody will respond and then put you in touch with me. It's a small office, so information gets to me really fast. You can email me at bshamberger@dixonwm.com. That's BSHAMBERGER at Dixon, DIXONWM.com. That's the email. You can find us on Facebook at The Financial Edge Podcast by Dixon and Company on Facebook. You can message us there. Our website is www.dixonwm.com. And you can also listen to the podcast anywhere you listen to podcasts, Apple Music, or I guess it's now Apple Podcasts, Spotify, Anchor FM, Google. at the Financial Edge Podcast there. And then there's also the book, Money and Stuff. So if you want a copy of that, email me, text us, let us know via Facebook. We can get you a copy.
Awesome, awesome. And make sure you let them know that your corporate IQ sent you.
Yes, yes, absolutely. 100%.
Yes.
So
Oh, this
Perfect.
is
Thank you so
great.
much.
Yes, Ben, thank you so much. This is so exciting. You know, Ben and I met back in 2019 when he was putting together Rise, and we stayed in contact, and I'm just really glad that you were able to, join us here. And yeah, for all the listeners out there, please go to this website. So many times, and listen to the podcast, so many times, even those that are six-figure POCs, you're happy you're making your money, but you really don't know who to trust with your money. You're happy you made it here and you're trying to hold on to it, but you have no idea what you're doing. So we want to encourage you guys to reach out to Ben. If for nothing else, do an informational call and tell him what you're trying to do. Tell him about your worries. He'll tell you what you need to do or where you need to go. So again, Ben, thank you.
absolutely.
Thank you
All
so
Well, thank
much.
you,
right.
ladies, for having me. Absolute pleasure.
Yes. Thank you. So, for the listeners out there, remember to stay tuned for more episodes on your Corporate IQ podcast. We're interested in hearing from you as well, so send us your topics and suggestions to info@yourcorporateiq.com. Likewise, you can like us on Engage or engage with us on Instagram or LinkedIn because we'd love to build a community with you online. All right, and until next time, stay tuned.
Stay tuned.
Take care.